Good morning, everyone. My name's Niall Kingsley, Head of Charities at Duncan and Topless. Oh, can you hear me? Thank you, sorry. Weird warning messages coming up on my screen. Sorry, I'll start again. Good morning, everybody, and welcome to our latest in our series of webinars that we're doing for our charity clients here at Duncan and Topless. I'm delighted to have with us today Diane Johnson, who's going to be doing a segment on the Charities Act 2022. And then I will do a short piece on charities and risk management. I think very topical, so I wanted to add that in today with the challenges that we're all facing, both in our business, our charities, and in our personal lives with the current global and economic climate. And then actually, most excitingly, I'm delighted to have Simone Connolly joining us for a segment. Now, Simone is director of one of our largest charity clients, Fair Share Midlands, and I think will give a really useful insight to us all about Fair Share itself, their activities, but also what it's like just being running one of our largest charity clients and the pressures that I'm sure many of you here today will relate to and hopefully get some good insight from. We're aiming to do about 15 minutes or so each. Diane might need just a little bit longer than that, as obviously there's quite a lot within the Charities Act 2022, albeit, as I'm sure she'll warn you herself, she could no doubt do with about 2 hours to go through it all in the relevant details. So she is going to be cherry picking a few sort of important parts. So I'm sure she'll flag you to the detail and be willing to take any sort of follow-up questions. But of course, with 15 minutes, she's not going to be able to cover it all. So about 15 minutes each. We'll aim to finish by about 11 o'clock, and we will have time for any questions you have at the end. And please do just feel free to drop them in. There should be a little Q&A icon at the top of your screens, so drop them into the chat as you think of any questions, because quite often you get to the end and you forget the burning question that you had part way through. So please do, I'd encourage you all to just drop those questions in. We'll be happy to answer those at the end. It's great to see so many of you attending today, and thank you for taking times out of your busy schedule. Hopefully we make it worthwhile for you. And we did get a number of people reaching out to say unfortunately they couldn't make it live today, but rest assured there will be a recording that will be released, and William will circulate details at the end, so do keep an eye out for that if you want to pass it to anybody else that you think it will be relevant to. And for those that are joining us at some point in the future via recording, welcome to you as well. So without further ado, I will pass over to Diane Johnson to give us an overview of the Charities Act 2022 and its implementation. Diane, if you're ready.
Thank you, Neil. So hopefully you can all hear me. So what I want to do today, thank you, Neil, for that introduction, and good morning, everybody. So what I want to do for this part of the webinar, as Neil said, is go through looking at the new Charities Act 2022. And Neil's slightly touched on this, that it is quite technical. So it's quite technical in places. So hopefully you won't find it too dull, and hopefully there will be something in there for everybody. So the slide I've just put up just runs through the sections that I'm going to be covering in hopefully 15 minutes and not too much more. I'm going to aim to concentrate on the main sections. So we will follow this index that I've put up on the screen. So we're just going to start with a very brief background to these particular changes. So this screen that this slide you can now see basically shows that the Act itself, the Charities Act 2022, finally received royal assent on the 24th of February this year. And it's actually been 11 years since they first thought about revisiting the Act and bringing this one in. So the last time there was a new Act was in 2011, which actually came into force in March 2012. So what this Act actually does is it actually reforms the laws governing charities in England and Wales, and it aims to give the charities more flexibility to manage charities effectively. It does aim to amend the 2011 Act. So if you happen to want to go and have a look at reading the actual Act and the legislation itself, it isn't particularly easy reading because it tends to refer to section numbers in the 2011 Act. So it's not, the 2011 Act is still going to be in force. So there are some quite technical changes that's in here, but its aim is basically to reduce the administrative burden on charities, which should save them both time and money. So to quote from the Charities Commission itself, the impact of these changes will significantly improve the efficiency of the sector, release more funds for use on charitable purposes rather than administration, and also reduce unnecessary and overly bureaucratic regulation that not only increases the sector's costs, but also is a factor in discouraging people from actually volunteering to become trustees. So the Charity Commission is very focused on bringing this in, and there's a lot of things that have to be updated for them to do this, and they're going to set out what they're doing is they're implementing it in 3 phases, and the next 3 slides I'm going to show you are this is the first of them. This is the first implementation timetable, part 1. So the items on the screen will come into force in autumn 2022, and we'll look at some of these in detail. There's some more factors coming in spring 2023. And the final part that is going to come in is in autumn 2023. And this implementation plan is what they've already decided they're going to do. So if we look at the Act itself, it's divided into 7 parts and 2 schedules. And basically, these refer back to the timetable that I've just shown on the screen, so when these particular things come in. In addition to that, there's a large explanatory note documentation that gives further commentary and examples of these changes. So if you do want to go and have a look at anything in a lot of detail, the explanatory notes themselves are 44 pages. So what I've done with regards to the main areas of change, this is really the sort of top 10 or so items that people pick out. Some pick out 5, some, but these are the main ones. So that slide looks a little bit dull, so we're just going to jazz it up a little bit because this is just a very quick guide as to what we're going to look at in the next 10 to 15 minutes, and I'm going to look at them some in more detail than others. So the first thing we're going to start with is the topic around fundraising. And basically what the provisions in the new Act are going to do is give charities more flexibility around initial and subsequent what they call failed appeals. And this is going to update the legislation because the current legislation predated really the internet and emails. So as you'll probably know, charities can sometimes put on an appeal and they don't get the amount of money needed in order to deliver that purpose that they're fundraising for, or happily in some cases they actually get too much so they can receive more than what they actually want. Now when you're doing that as a restricted fund appeal, you can't use any leftover funds, or if you haven't got enough you can't use them for something else. So that's where the situation is going to change. So they're going to give more simpler rules on how you can use money that you've raised that you can't spend on what you've actually raised it for. Now that it is quite small, because donations of £120, you don't have to then go back to contact individual people for permission. So there's a little bit of technical details on that, but the general point is that really for all charities, it still remains that if you are doing a fundraising appeal, then it's most advantageous to make it clear in the guidance that your fundraising literature, that any funds that you raise that's over what you've raised, or it doesn't meet the target, that you can still use that appeal fund for other charities purposes, because this makes it a lot more straightforward if you have got unused funds. So the next topic I wanted to touch on is what's called ex gratia payments. So ex gratia payments is really where the charity trustees decide to make a payment out of their charity funds, which there is no legal basis to do so, but they feel morally obliged to make those payments. Now, under existing requirements, you would have to go to the Charity Commission, the court, or the Attorney General, depending on what you're governed by, if you wish to make such a payment. The main area that this will be relevant to will be those charities that have significant legacy income, because what can happen is a charity can be left a substantial piece of money by way of a bequest from someone's will, but there might be an issue that comes after the charity's received that money. If, for example, that person may have made the will some time ago, and they may have made another will that they probably didn't quite get legally in place before they passed away, and therefore someone else might have also been promised some money in the will that's been disadvantaged. So that can create a moral dilemma. So that's really what it's designed to cover in those places, because before they needed permission. What it does is it still has to have permission for larger payments, but if your charity, for example, has an income of up to £25,000, a payment that the trustees wish to make as an ex gratia payment, they could do that now, up to £1,000 without Charity Commission approval. If their gross incomes was £1 million, that limit raises to £20,000. So that may be only relevant to some people on this webinar, but if it is, then there's some good news there for you. So payments, the next point is payments to trustees. So at the moment, trustees can be paid for services provided, but they can't be paid specifically only for goods. And that power is being relaxed a little bit. It's being changed so that they can pay in circumstances trustees for just providing the charity with goods. And it's thought that by doing that, it will therefore could save the money, the charity money for doing that. It's still important to know that payments to trustees can still only be made in accordance with the charity constitution, and some charities have constitutions that prohibit those payments being made, so you just need to check that doesn't apply to you. So this is quite a whistle-stop tour. So permanent endowments, most legal restrictions regarding permanent endowments do stay in place because they were amended some time ago. But there's now a power that you are able to borrow from your permanent endowment in certain circumstances, which could be up to 25% of the calculated value. Now, there's some very detailed notes on this in the explanatory notes, so and some examples. So it's you can go and check how you calculate the limit that you need to apply in order to work out what you can borrow if you wish to make access to those funds. So the next area is charity land, and this applies in quite a lot of charities, really. Charities that hold land, the existing rules do prohibit charities or can be prohibitive to charities from disposing of land, because there's a lot of rules that you have to go through if you wish to dispose of land. You have to get a lot of a professional advisor's report and take advice, and that there's a set criteria as to who can give that advice and what needs to go into the report and the mechanics. Now that is being relaxed to give a wider range of people that you can access in order to do the regulatory paperwork prior to disposing of that land. And it's hoped that that should give flexibility to charities, because quite small charities who want to sell a small piece of land, it's not really cost effective for them to do that, because the regulation and the cost of getting that external valuation and the process can be quite prohibitive and not really proportionate to the amount that land will realise if it was sold. So this is hopefully a welcomed addition to the guidance and the rules. So the charities governing document, there are processes which you can go through to amend your governing document, and the rules have been updated to make it easier for certain charities to do this. The approval that may be needed has been relaxed for certain parts of what you wish to change in that governing document. Certain bits haven't, such as the charities objects, that still hasn't changed, but the idea of doing this change is to make it more, to give charities more and greater flexibility to respond to changes in their environment and their organisational needs. And it will clarify the steps that the charities must take if they wish to go through the process of governing their document, changing their governing document, sorry, and making it more up to date and fit for purpose. So leading on from charities objects, charities purposes is another area where the Act is introducing more consistency in the factors that need to be considered by the Charity Commission where a charity wishes to change its purpose. I've put on the screen some of the things that the Charity Commission will consider, and that will hopefully enable charities where their purpose might be a little bit restrictive to widen what they can do, and the process of going through that hopefully will be easier for them to do. Now, of the top 10 which I showed you in the list and in the colourful squares a little bit earlier in the presentation, there's 3 remaining out of that top 10 which are on the screen now. I'm going to just cover these very briefly. So the charity's name, the Charity Commission are going to be given new powers so that they can direct that a charity needs to change its working name or its legal name if the Charity Commission sees there's a reason for them to do that. And it can delay registrations accordingly if it doesn't particularly like the name that's been chosen by that charity. Rules regarding appointment on trustees is a little bit specific. It's really where there's a defect in the process or there's uncertainty to the validity of an appointment of a trustee. So those new rules coming in are really about those particular circumstances. And the final one on there is changes to facilitate charity incorporations or mergers. And this is designed to make it easier to transfer charity assets via what they call a vesting declaration. And it is hoped that this will remove the need for charities to retain what they call a shell charity. And the most common place for this is where a charity has been left, or it knows it's been left some legacies, which it is likely to get in a future date. And if that charity then merges with another charity or it incorporates, those legacies that they know they will get at some point could effectively be lost. So what in those cases, what the charity often does is keeps the old charity sort of as a shell in the background to receive those legacies when they come into action. And these rules are really designed to to prevent or to help them so they don't need to have that shell charity anymore, and those legacies will then pass to the new charity, and that can save a lot of cost, time and bureaucracy in that particular area. So that is a very quick guide through those 10 main points. There is some new and revised guidance that's going to be issued by the Charity Commission. It's likely that there is some online forms. They will also need to change. Aside from the new 2022 Act, they've made a commitment to look at the financial thresholds that are currently and are still in the Charities Act 2011 to see if those need to be revised, increased. And they've already made a commitment that they will review this new act, and bearing in mind it's not coming in until it finally comes in autumn next year. So there's an 18-month lead plan for that implementation timetable I showed you earlier. They've already agreed that they will review this act in 3 to 5 years from February 2022. So I just want to finish the section with what the Charity Commission thinks regarding the changes that are now being made. It does welcome and support the changes, and they've said that this should make life simpler for trustees and help them maximise the benefits that their charity delivers. And they sum it up by saying that's what really matters, letting trustees get on with the important work of running their charity whilst maintaining strong oversight for the instances when things do go wrong. So on that question, there's questions. Neil's already explained that those questions, if you have any, can go into the question chat and we can take those at the end of the presentation. So hopefully you found something in there that is of use to you. Thank you for listening, and I will now hand back to Neil for the next part of the webinar, which Neil is going to be presenting on risk management. Thank you very much.
Thank you, Diane. That was brilliant. Thank you. As I say, it was very difficult to cram in that in 50 minutes. I thought you did brilliantly. So thank you for your contribution today. As I say, for my part, I want to focus on charities and risk management. Without meaning to be too depressing, it does feel at the moment the world's sort of pinballing from one crisis to another, and that makes risk management even more important than ever for charities and its trustees. And that's why I wanted to focus my segment on this area today. The Charity Commission states that charity trustees should regularly review and assess the risk faced by their charity in all areas of its work and plan for the management of those risks. Risk is an everyday part of charitable activity, and managing it effectively is essential if the trustees are to achieve their key objectives and safeguard their charity's funds and assets. Diane, can I just get a quick thumbs up that you can see my slides? Perfect, thank you. So today I want to delve into the Commission Guidance CC26, Charities and Risk Management. The full guidance is available on the Charities Commission's website. Now, charity trustees, as you know, have numerous responsibilities and time commitments, often juggling their normal day jobs with their voluntary role as trustees. But it is important not to let good governance and risk management fall by the wayside, as the trustees from this charity have recently found out. Now, this inquiry actually focused on the main area, which was some slightly perhaps controversial fundraising setups where a related party was set. Related party had a fundraising company and rather dubiously they were deducting some quite sizable amounts before paying the net proceeds of the funds raised to the charity itself. Now that got into the public domain and of course caused some rather large backlash and caused risk to the charity's reputation. But why I sort of brought this example up is actually these couple of comments which stood out to me. And really it just focuses on the fact that the Commission are very much focusing on the way the charity trustees managed the risks. And you can see here they weren't satisfied that the trustees had taken adequate steps to manage the risk to the charity's reputation. They went on to say the trustees were unable to demonstrate that they took a balanced and adequately informed decision, and nor did they properly consider the exposure to risks to both the charity's assets and reputation. So there was a real focus, and I think that just highlights the importance of trustees here today, ensuring that you can demonstrate your accountability and that you've gone through the proper risk management processes. A good risk management framework will help you as trustees identify major risks and make decisions on how to respond. For those that are above the relevant thresholds and are required to make a statement in their annual report regarding risk management, it will enable you to draft and make this statement with confidence. Charities, of course, can vary in their size, complexity, and the activities that they undertake, and so therefore can the risks that they face. It is important, therefore, that the risk management process is tailored to each of your charity's individual circumstances. Identifying and managing risk is a key part of effective governance for all charities, whatever their size, and you can see on this slide why risk management can be so important. This can be particularly true during periods of economic uncertainty, which we're facing at the moment, where funding could be impacted, where there could be large swings in investment, or as Simone, our next speaker, knows well, swift and sudden rises in demand for their services. Good risk management also enables informed decisions and timely action to be taken by trustees, but it also helps to make the most of opportunities in the confidence that risks can be managed and leads to improved forward and strategic planning. Charities, of course, we want to help people as much as they can now. But trustees also have to balance this and manage risks and reserves to ensure that they can continue to help their beneficiaries in the future. When assessing risk, you as trustees need to consider a broad range of factors, both internal and external, that might impact your charity operationally, financially or reputationally. Be things like financial climate, societal attitudes, for example. To do this, it is recommended that your risks are categorised and considered under the following headings. Governance risks. Have you got the appropriate organisational structure? Have you got the relevant skills and experience within your trustee body? And are you managing any conflicts of interest? Operational risks, such as beneficiary welfare or safety. Are you taking on new contracts at the appropriate margins to ensure the long-term viability? Financial risks. Have you got the appropriate level of reserves to ensure your future? And are you monitoring cash flow appropriately? Are you dependent on only a few limited sources of income? These are all the sorts of areas you ought to be considering. External risks. So we've already touched on turbulent economic or political environment, very topical. I've noticed a slight typo in that slide. I'm not sure if that's a fraudulent slip or not. That's actually supposed to read changing government policy, not hanging government policy. So apologies for that. And of course, compliance with law and regulation. Yeah. Are you acting in accordance with your constitution? Have you got appropriate knowledge of the legal responsibilities of yourselves as an employer if you are employing staff within your charity? Our CC26 contains a really useful annex number 2, which is well worth a read as it sets out in some more detail the potential risks that you might face and that might impact you as a charity. But best of all, it does give some possible steps to mitigate those risks. I think hopefully that will prove very useful to trustees here today that are embarking on this process for the first time. So there's 4 basic strategies when it comes to dealing with risks as a charity. Transferring or sharing the risks, the financial consequences to third parties, usually through insurance or outsourcing of activities. You might seek to manage or mitigate risks. It may be possible that you avoid an activity giving rise to a risk completely. Or sometimes it may be you just have to accept that it is a risk that cannot be avoided if a vital activity is to continue. An important part of risk management is disaster recovery planning. What should happen if a serious event does take place, and how can the charity plan to resume normal operations as far and as soon as possible? As part of this process, trustees should involve your team members across all the functional areas of your charity, so that as wide a net is cast to capture all the major risks to your charity's operations. Using a scoring model weighted by impact and factoring in likelihood of a particular risk happening will allow you to identify and focus on the major risks to your charity. You can then create a plan in the event of these outcomes actually happening. And of course, any good plan should be tested before put into place to ensure it is fit for purpose, should it be needed for real. Importantly, all relevant team members should be trained on the disaster recovery plans so that it can be implemented swiftly and efficiently at the time when needed. And it's important to review your disaster recovery planning to ensure that it's still fit for purpose whenever called upon and is still applicable to your current activities. So where does risk management or the responsibility for risk management lie? Well, ultimately with you as trustees, and therefore your involvement in the key aspects of risk management is essential. That's not to say that you have to do it all yourselves, but you should be involved to the extent that you're comfortable making the risk management statement with confidence. To help you with this, the Charity Commission sets out a useful risk management model and its CC26 guidance. Establishing a risk policy and considering risk tolerance and risk profile will help you as trustees in your decisions as to what level of risk you're willing to accept. It will also make clear to the rest of your managers what risks can and cannot be accepted on a day-to-day basis. And as I've said before, identifying risk is best done by involving all those with detailed knowledge of the way your charity operates. Then assessing your risks so they can be put into perspective in terms of potential severity of their impact and likelihood of occurrence. This will help you to prioritise your major risks for management or mitigation And if your charity is vulnerable to risk that would have a significant impact on its operations, it should be considered and evaluated regardless of how remote the likelihood of it happening appears to be. For this reason, methodologies for scoring risks have been updated to give impact more prominence. The caution with this approach, however, is that studies do suggest that most business failures are as a result of a series of small linked events rather than one serious event, these smaller linked events having too great a cumulative impact on the charity or business. Anyway, the next step is to evaluate what action needs to be taken on the risk and to draw up a plan for any steps that need to be taken to address them. A balance, of course, will need to be struck between the cost of managing the risk and the risk potential impact. As I've said before, good risk management is also about enabling your charities to take opportunities and to meet urgent need, not just preventing disasters. But periodic monitoring and assessment should be undertaken so that new risks are addressed as they arise. And I think that what is my key message for today, particularly with the uncertainty at the moment, the economic environment, the Bank of England announcements and measures, the budget that's coming in. When was the last time you revisited your charity's risk assessment, and is it time to do that again now? The Charity Commission also gives some useful examples of a risk register as seen on this slide. Again, this is within the CC26 guidance, so you can steal the template from there. This template ensures the risk and its assessment is captured, as well as the monitoring process, who's responsible and further action required, and when it should be reviewed and how periodically. Now, it's strongly encouraged that trustees link their reserves policy to this risk assessment. We often see very simplistic reserves policy, i.e. a set period of expenditure. Charity Commission really encourages you to delve a bit deeper and expand those reserves policy and actually incorporate your risk assessments into that. So can you respond and survive in the event of one of those risks materialising? Are your reserves sufficient to the challenges that you may face in the future and the risks that may arise? Would you have the the funds to respond to opportunities, new technology, or to undertake new activities, or to deal with an increase in number of people calling on your services suddenly due to external factors? These are all things that you should be considering when determining the appropriate level of reserves for your charity. Finally, I thought I'd finish by sharing this slide, which is the results of a survey undertaken by Grant Thornton about the top 10 key risks charities were facing in 2021. This certainly rings true within my charity client base, although I'm sure for 2022 we would add in energy prices, inflation and changing government policies, not hanging government policies. Now, I have great pleasure in introducing Simone Connolly, Director of FareShare Midlands. FareShare works in partnership with the UK's largest food redistribution charity, FareShare UK, to source and redistribute surplus food. They've grown considerably over the last few years, and as you can imagine, and rather quite sadly, the call on their services has increased massively, both during COVID and again now with the cost of living crisis. I'm delighted she's agreed to join us to share her experience of running this charity, what current issues and challenges they're facing, and also, I'm sure I'll tell you a little bit more about Fair Share Midlands itself. Simone, with pleasure, I shall hand over to you if you're ready.
Thanks, Neil. Thank you. Let me just share my slides. Okay, here we go. Yeah, thank you so much for that introduction, Neil. I'm really pleased that you've asked me to attend today. What I thought I'd do is just give a bit of a summary overview of Fair Share Midlands and our strategy for the next 3 years. I think it's important to note that we're actually working on our 3-year strategy at the end of 2020. Bit of a bonkers time to be setting your 3-year strategy, obviously COVID pandemic, but our previous strategy had run out and it was time, and I'll kind of pick up towards the end of the presentation what we're doing about this strategy, because we are now having to look again at some of our commitments and certainly reset some of our what were probably a little bit too ambitious aims 2 years ago. So yeah, Neil, you did a great summary there. So Fair Share Midlands turns an environmental problem into a social solution. So Fair Share Midlands is indeed a collaborative partner of the Fair Share UK network of charities. And I think there's 23 Fair Share regional centres from Aberdeen right down to Cornwall and over to Northern Ireland. And we all do exactly the same thing. Albeit Fair Share UK have the exciting role of lobbying and campaigning the government, but we provide a solution to the food industry for when food becomes surplus to requirement in the supply chain. I won't go into kind of the logistics of how we work, but there's various reasons why food becomes surplus, but I would say the #1 reason is forecasting inaccuracies. Although the food industry are getting much better and much more intelligence being invested into to kind of get those figures right in terms of how much food is produced and how many customers walk through the retailers' doors, there's still a huge volume of food that is being wasted. But it is getting increasingly more difficult to get that food into Fair Share's network of warehouses, which we'll come on to soon. So why do we exist? There's 8.4 million people in the UK who are struggling to afford to eat. That is probably closer to 9 million now, and I would say is increasing because of the cost of living crisis and the impact of COVID-19. Fair Share Midlands territory is we basically supply community food members, organisations to the East Coast, so right over to Skegness to the Welsh border. So we have quite a significant patch to cover. There's millions, I would say, of that 9 million, almost 9 million people in the UK that are struggling to afford to eat. There's probably over 2 million in the Midlands, so there's a huge amount of people and families that are needing support. In Birmingham alone, there's 131,000 children who are living in poverty. In Leicester, when I started working for Fair Share, there was about 20,000 children who were classed as living in poverty. So that's growing up in homes where parents are probably skipping meals, children are probably going to school hungry, not learning well, poor attainment, etc. Certainly not going on holiday, and some of those children vulnerably housed as well. So not far off becoming homeless. And then at the same time, we've got all of these people in poverty and probably 2 million tonnes of food that is going to waste. So they're the key reasons why we exist, to turn that surplus food into a social solution and get that to organisations who are supporting some of the most vulnerable people in our communities. So we have a very quite a long, lengthy vision, a very clear mission. So our mission is to maximise the social value of surplus food. So what we aim to do is ensure that the surplus food that we redistribute has as much social value as it possibly can, and we do that through really close partnerships of our community food members. So we are absolutely not a food bank. We often get referred to as a food bank, but what we do is we work with community organisations, charities and charitable organisations and we help them to feed their communities in the most socially valuable way. So that isn't just about handing over food parcels, it's about addressing issues like mental health problems, isolation, loneliness, helping people know how to cook on a budget, but really importantly, bringing people together to eat socially. That was really difficult during the height of the pandemic because obviously organisations closed down and people were isolated and we were in a lockdown, so getting people to come together just wasn't possible. So demand for our services changed significantly, and we became almost like a food parcel provider, but we're very much journeying away from that now and getting back to that kind of social benefit of feeding communities. Our purpose, our kind of overriding purpose, is that we fight hunger, we tackle waste, and we create opportunities. And what we mean by creating opportunities is not just about food at Fair Share, it's also about so I'm just checking, can you hear me okay?
Yes, we can, yeah.
Oh, great, okay. So we don't just redistribute food, although that is a huge undertaking. We also provide employment opportunities. So we run quite significant, in terms of numbers, employability programmes that are mainly funded through two local authorities in the Midlands, Nottingham City Council and Birmingham City Council. And we have a commitment to get, I think it's 400 people into work over the next 3 years. So that's, through the redistribution of surplus feed, we're upskilling, we're training, we're rebuilding confidence, and we're helping people into work either for the first time in their life or after a long period of unemployment. And our vision is a Midlands region where no one goes hungry, when there is food being wasted, no child goes to school on an empty stomach, and where vulnerable people are supported to rejoin the workforce. And I am probably about the only person in the organisation who remembers that vision. We have 5 core values. Our values are really, really important to us at Fair Share Midlands, as values should kind of underpin, the culture of most organisations. So our teams, our volunteer teams, our staff teams, our trustees support these values. So we have a passionate and ambitious, respectful, a collaborative workforce who we help to be as accountable as they can be for their actions and their decisions and their work at Fair Share Midlands. So our overall ambitions over the next 3 years, and this is kind of what we're really focusing on at the minute in terms of can we actually achieve some of these really ambitious targets. But last year we redistributed enough food to support 16 million meals, so quite a significant amount of food that went out at the door of our 9 warehouses. That food helped to feed 60,000 people per week, and we were supported by a team of about 200 volunteers. We have set the ambition for this strategy to grow our food volumes by 20% each year. And that means that we'll be close to 9,000 tonnes of food redistributed, which equates to probably about 25 million meals, I think. We're aiming to support 100,000 people through a network of 700 organisations. We're aiming to get 400 people back into work, and at the heart of what we do at Fair Share, we do support individuals who are vulnerable, where access to food is poor, and absolutely tackle food insecurity. But we are an environmental charity, so we're doing everything we can to improve our environmental footprint through our supply chain, and in particular at the minute we have huge efforts on improving the efficiency of all of our warehouses, because we've got a lot of chillers, freezers, big industrial shutter doors that let the heat in or out. So we're actually working with Tesco to do kind of energy efficiency reviews, and hopefully we can drive some efficiencies, because we just need to, obviously, because of the cost of fuel and energy. Albeit we have some reprieve for 6 months, that's not long. So we're having to prepare ourselves for after the 6 months of that energy cap being removed. Okay, so our pathway to success, this really just kind of is a good visual to share with different audiences, that everything we do should have an environmental impact. We also have to be financially sustainable. We have to make decisions that are from a sustainable and financial base, and of course our social impact. So this is just something that's really good to show our stakeholders, and something that our staff members and volunteers can resonate with, and just in one image it kind of shows how we're going to get to where we're going to get to. Of course, we have strategic objectives. So we have 5 themes to our, I'm not going to go through all of these, but we have 5 themes to our strategic objectives that really set out to us how, what themes we need to perform against. And of course, for us, we have to understand and meet the region's need. That's really, really important. We're actually changing that at the minute, because there's just absolutely no way we're going to meet the region's need, but we will aim to reduce the region's need. There's just no way you could do that with surplus food, so we're just rethinking some of this. But then underneath each strategic objective we have key performance measures and commitments, which again I won't go through, but you can see here some of the commitments we're making against meeting that region's need. Identify how we best interface with the local food industry, understanding and better meeting the need, and particularly in a pandemic and Brexit era. Of course, now we have all the supply chain issues and caused by the Ukraine and Russian war, and so on. We have done a huge amount of work on our people and culture strategy recently. So we developed our overall strategy, but then once that was launched, we started working on some of the departmental or specific strategic priorities. A real focus for us has been our people. We grew very rapidly during the pandemic. I think we had 25 staff members. We've now got about 76. We merged with FareShare West Midlands, so not only were we dealing with the pandemic, we were dealing with a merger as well. We took on more warehouses. We did absolutely everything we could to support our communities. We supported the government with large-scale food purchase schemes, so we could just get food out to communities that needed it, as they had to kind of close their doors in terms of cooking. So although our people have always been central to what we do, we haven't really had time to step back and think about, okay, so how are we going to support our people so that we can retain good staff, and we can help them to be the best that they can be, because ultimately that will help FareShare Midlands be successful. So we're investing a lot of time and attention to our staff and our volunteers. But also, many of you that are here today will perhaps recognise or be able to relate to the fact that recruitment and retention is at a place where I've never known it before. It's increasingly, it's been very challenging over the 12 months, previous 12 months, and it's been kind of labelled as the big resignation. But we're finding that we're also struggling to even get people to take on new roles. So we're having to look at things like salaries. Of course, the government have introduced a higher real living wage, and we're a real living wage organisation. We support that, and the increase has been quite significant. It's gone up to £10.90. So financially, we've got all of those challenges that we're having to try and meet. Whilst we know we need to pay our people more, whilst we are a bigger charity, we also have our own financial challenges as well. Efficiency environmental, we're making some big commitments against our environmental aims and credentials, but in particular the focus at the minute is around kind of the efficiencies of our warehouses and our running costs. And we know that the food industry are doing everything they can to operate leaner and more efficiently, and they can demonstrate that to us through our partnership working. Communications and systems, as we have to continue to work on our profile. Our reputation is really important. You're only, one negative story away from your reputation going up the Swanee. So we work really hard on, telling those positive stories and making sure that our impact is as communicated as positively as we can. And then, of course, systems. We're a much bigger organisation now, so we have to have sufficient systems to match our product, our activity. So the huge volume of food coming in our doors and going out of our doors, for example, and are our vans, following the most efficient routes, and have we got logistics planning, etc. So all of that, in terms of systems improvements, is something that we're working on. and have like an IT strategy for the next 2 years. Fundraising and employability, we all have to fundraise as a charity. We have 2 income streams at FareShare Midlands, and it's very similar across the FareShare network. We have earned income, and that's in the form of we charge our members a membership fee, which is, to give you some idea, that's about 10% of the value of retail food. So if we're supplying an organisation with £500 worth of retail food, their membership fee would be £50 a week. We're aiming for the membership income to be equivalent to 80% of the income that we need. We're nowhere near there yet, but that to us would be a sustainable financial model. And then the balance of any income that we need to run our service is from fundraised income. So yeah, Neil said there's plenty of risk we're all thinking about at the minute. So we have I would say quite an ambitious strategy for the next couple of years that we are thinking through at the minute, and we have many risks that we have to consider. These are just some of the summary risks that are really, I would say, central to our conversations, our planning, our rethinking of our strategy at the minute. But COVID and the lasting impact both to people and the need for our service, the increased costs in responding to Brexit, Ukraine and the Russia war, and the impact that is having on our supply chain. So I think demand for our service now is probably at the same levels as the height of the pandemic. But what we haven't got is the food to meet that demand. So it's a real challenge for us. We've got organisations that are waiting to join our service, but we just can't take them on at the minute. The fundraising risks as the pandemic support ends. During the height of the pandemic, we had so many unsolicited donations, never seen before, as did many charities, but that has certainly come to an abrupt end now. And one of the things that FareShare has to be mindful of is that we supply nationally 11,000 organisations who are all operating in the poverty space. So, certainly things like, your smaller grants and trusts to provide, the smaller amounts of money, we have to make sure that we're not competing with them. So, and then of course FareShare UK, who are in an independent organisation who kind of underpin the FareShare network with all of their, almost like the back office support, food safety, health and safety, etc. They do all of the lobbying. They basically work with the food industry, so they also apply for funds that we would apply for as FareShare Midlands. So it's quite a challenging, fundraising is quite challenging for us, but we've got a clear strategy. And I think 3 months into this year, I think we're 46% against the annual target. So we're doing okay there. Insufficient food volumes to meet the growing need caused by the cost of living. So yeah, I've just said, Brexit, Ukraine and the Russian war and the impact on the supply chain, it means that we're just not getting the food that we need. Insignificant political importance given to the environment and food redistribution. Who knows where Liz Truss is going with this? FareShare UK has an ask-in for £25 million to invest into redistribution. That fund, it wouldn't be to support FareShare per se, it's to ensure that the redistribution of surplus food is cost neutral to the food industry. It happens in other European countries. France, for example, the food industry get tax breaks and they redistribute about 4 times the amount of food that we do in the UK, and their food industry is probably about the same size. So with some government intervention, it is possible to get more food onto the plates of vulnerable people. We're very ambitious. As I said, as one of our values at FareShare, we have to resist the temptation to take on too many projects that overstretch our teams and finances. We haven't been very good at this in the past, but we are saying no more now. But for how long, I don't know. We've got a lot, we've grown our staff teams, and although we need to focus on making sure that they've got the development plans in place and they're well supported and there's enough wellbeing interventions, when they can see that the need is there, they want to push forward with doing as much as we can as an organisation. Our financial model, we spoke about that 80% of the income we need is to come from membership income. That could be challenging due to kind of the impact on our members' finances. We are supporting organisations whose budgets and finances, like ours, will be stretched. particularly if they're cooking food and having to heat their buildings because they're supporting you know, the vulnerable in their communities. So we're keeping a close eye on that over the next few months. And then, of course, too much time. You know, we're guilty of this as charities. I've certainly been guilty of this over the past few years, but too much time spent on partnerships that don't come to fruition. We can't do that, certainly with the food industry. We need to be leaner than we ever have been before, and that means recognising when, you know, our time invested in something just isn't going to come to fruition. So we have to say no and walk away. So yeah, Neil's spoken about the Charity Commission Risk Guidance CC26. At Fairshare Midlands, we have an array of governance arrangements. We have a full board of trustees who meet at least quarterly to review performance against our strategy, our financial performance, and indeed consider any business proposals that we might put forward to them from the management team. We have a HR and remuneration committee who meet at least quarterly to review remuneration, performance against the people and culture strategy, wellbeing interventions and things like pension arrangements. And all of these committees have clear policies, policy statements in terms of reference that set out what their remit and responsibilities are. Of course, we have a finance committee and a treasurer that meet at least quarterly to review financial performance, annual budget, banking and investment arrangements, and annual price and salary increases that may have been recommended by the HR committee. Risk committee again meet at least quarterly. I would probably say 6 times a year. The committee reviews the organisational risk register, which follows the Charity Commission framework CC26. And what the committee tends to do is review the top risks, which have been scored on the impact and severity basis, and then do a deep dive in a certain area, say environmental or financial or operational or strategic risks. And then they report their the discussions and actions of the risk committee into the board of trustees when they meet. And we do support vulnerable adults. Through our network of organisations, we do come into contact with children. We don't have children, anybody under 18 working in our warehouses, but we do have a safeguarding committee who meet at least biannually to review performance against an agreed set of safeguarding KPIs. So yes, all the committees report into the full board and then make recommendations for approval. So none of the committees actually have sign off or approval responsibility. Anything that's discussed at the committees is basically goes to board for final ratification. And then this is really important, and actually we learned a huge amount from this at Fairshare Midlands. 2 years ago, 2.5 years ago now, we carried out a full governance review using the Cranfield Trust, so it was actually pro bono, and they carried out that governance review against the Charity Commission's Code of Governance. So we will probably do that again next year. I think it will be time, and I think they made 23 recommendations, which the board then worked through. I'm pretty sure we've addressed most of them. I think it was reassuring to know that our governance arrangements were adequate. But from that, actually, we then set up the subcommittees, which has been, for me as a CEO, hard work at first, because you've got not only your board of trustees, you've got a number of different subcommittees that you have to report into and attend. But actually having time to do those deep dives into all the important areas of the charity and running a charity has been a real enabler and support for me. So anybody that's thinking about their charity commission, their charity governance structure and doesn't have a number of different committees, I would at least consider it. Some may find it's too bureaucratic, and a full board that meet regularly is enough, but it certainly helped Fairshare Midlands. And as I said at the beginning, we are reviewing the current strategy, taking into account the external environment and significant impact on our performance, because what we set out to do 2 years ago is unlikely to be possible over the next 2 years. And at the next board meeting, we'll have what we're calling a deep dive into the strategy and in particular food, and just getting the board to fully understand why the food that we need isn't coming into our warehouses in the volumes that we need to respond, and just kind of getting their thoughts and any steer that they may want to give us. That's it from me. That's just the one pager that sets out who we are, what we do, and what our strategic objectives are. And that's just basically, we have a number of key performance measures which we review. The board has a report on once a month, and the senior management team also review once a month, but we don't need to go into those, but all the obvious things of running a charity.
Thank you very much, Simone. That was brilliant and really insightful. I think a lot of those points will hopefully sort of resonate, I'm sure, with our attendees here today. I did enjoy the emphasis actually on the culture and what you're doing in that area. I think that's something that's becoming more and more important, not just to, well, it is becoming very important to businesses, and even Duncan and Topless are doing lots in that sphere, and it's interesting to see that actually coming out into the charity sector as well, and the importance of culture and how that drives through, feeds through the whole organisation and helps you achieve your objectives. So I think it's time for questions. We do have a couple that have come in, but it's not too late to drop any into the Q&A box. So let me just pull up the ones we have. We'll answer a few questions and then I'll do a quick outro and we will let everybody get on with their day. Apologies, we've run slightly past 11 o'clock, but do hang on with us if you can. So the first question here is, this is probably one I can throw to Diane, actually. So somebody's asked here, Diane, is it useful for implementation of a new piece of legislation to be staggered like this with its introduction? They said they were just curious as to why you think they've done that rather than bringing it in all at once. Sorry, Diane, I think you need to unmute yourself.
Sorry, schoolgirl error. Sorry about that.
Yeah,
apologies.
right.
Thank you, Neil. Thank you for the question. That's a good question. If I'd probably had 2 hours to cover it, was probably actually one of the bits that got crossed out of my initial presentation. I think the reason that's the delay in the implementation is that they actually think that the Charity Commission will need to introduce at least 12 new or updated guidance documents, and in addition to that they'll have to do at least 20 internal guidance document updates as part of the whole process. So that takes time. So the time it would have taken them to have updated all that guidance to get it ready to come out, I think, is a big factor. There's also something called the again, I didn't have time to cover this. It's to do with revising things in the charity land section with the disposals of land, and there's certain things that they believe the land registry will have to change in order for that to work. The online forms, I did mention some of those will need updating, and in conjunction with that there was some guidance that the Law Commission's report suggested it needed to come in, but it's going to come in at the same time, but it's not part of the overall legislation. So I think there's just a lot of things they've got to change, and that's also, I think, why their implementation timetable says autumn 2022, spring 23, autumn 23. It doesn't give dates, and what it does say is that they will update on their charity guidance website as they do it. It's not date specific, so I think that's the reason why it's in 3 tranches. They just haven't got time to bring it all in one go. They're going to be really busy. So I hope that answers the question that's been asked.
Oh, I think that does actually. Yeah, thank you, Diane. Let me scroll to the next question. So I think Simone, I I think you probably touched on some of this during your presentation, actually, if not a lot of it. So this question might have come in just before, but I shall ask it anyway. So somebody's said, well, firstly, which is very nice of them, said what a fantastic charity Fair Share is. I'm sure there's many more fantastic charities here with us today as well, but that's always nice to have commented on. They said they saw Fair Share UK on the news last week and the challenges it was facing with reduced supplies of surplus food being made available by the supermarkets. They've asked, has this impacted Fair Share Midlands? How challenging is it to sort of manage such unforeseen risks and ensure you can continue to help get food to those who need it?
Yeah, it's incredibly challenging, and you know, we want to operate as efficiently as we possibly can, and not just you know, almost like a hand to mouth, but that's just the reality of how it is at the minute. The supply chain challenges go right up to, you know, the farm gate, basically. Producers and manufacturers are basically saying to the retailers, look, we can't even supply you with enough products to fill your shelves at the minute. We can't even get enough staff in. We can't get enough drivers. So the impact of the HGV drivers continues and not having enough drivers, but then just getting enough staff in to actually make the products, get them into the production system is also challenging. Recruitment is an absolute pain at the minute for the food industry. But then, of course, you know, the costs of producing food. When you produce anything, you know, you need energy, and there's lots of energy that you need to produce food. Production, then you've got chilling down the food, freezing the food, then transporting the food. So the food and the producers and the manufacturers are doing all they can to get the food to the retailers, but certainly not overproducing like they would do historically, just in case somebody like Tesco would say, look, you know, we've ordered 10,000, but we actually need 11,000. Producers and manufacturers will overproduce, so because it's cheaper to do that rather than, you know, Tesco come back and say, actually, we need more food. So the impact of that then is that surplus is decreasing slightly. There's still huge amounts of surplus, but the challenge for the food industry really is getting that food into our network of warehouses, and particularly getting the volume of food in that we need to meet the growing demand. So how long is it going to stay like this for? Who knows, but certainly government intervention would help, because what it would allow us to do is support some of those redistribution costs that the food industry have and really just can't afford to support at the minute. So organisations that used to be able to afford or certainly have a budget to help redistribute food, that budget's being depleted. So is it a good thing that less food is being produced to be wasted? Absolutely, but there's still a significant volume of food that we should be redistributing. So yeah, it's challenging. I'd love to know how long this is going to last for. I certainly know that the impact of the cost of living is going to be impacting the communities that we support, which is the most deprived communities, for a long time. So we have to try and do as much as we can to try and respond to that, working in collaboration with thousands of other organisations across the voluntary sector. Bit of a long answer there, Neil. Sorry.
No, that's great, and wish you all the best with this child, facing these challenges and achieving your vital services. There's a last question here that says, with the reaction to the government's mini budget and the bringing forward of the budget with the accompanying OBR forecast, which is expecting to announce large cost-saving cuts to government budgets, how do you see this impacting charities? It's probably fair if I start this one, I guess, since you two have answered one. If you do have any thoughts, though, please do jump in. I suppose there's 2 or 3 ways that jump to mind. Obviously, a lot of charities rely on local authority contracts. Obviously, those tend to be renewed in a sort of cycle of 2, 3, 5 years, etc. Now, I imagine that these local authorities will also be seeing cuts to their budgets feeding down, and therefore those negotiations might be a little bit tougher to try and get the contract price increases required at a time when charities are facing increased costs and possibly reduced donations. I'm sure they will see increase in demand for a lot of charities services. I wouldn't blame those who think the government might be outsourcing some of their social responsibilities, and charity sectors having to pick up these critical services. And I think also investments. Obviously, we saw how the market reacted to the mini budget, and a lot of charities keep their reserves in investments. So that could be a challenging time for charities, and if they're not doing so already, I'm sure many are, but speaking to their investment fund managers, reviewing their investment sort of risk profile and strategies, and yeah, having those conversations. But it's a very uncertain time at the moment, and I'm sure there will be much more demand for charities to get the country through some, unfortunately, possibly difficult times ahead. I mean, Diane, Simone, if you wanted to jump in at all, just anything you're particularly concerned about with the budget at the end of the month?
No, I mean, I think you've kind of covered it more from the sector perspective. Certainly my concern sits with those that are already vulnerable and the impact on their income. We're not just, what we're seeing also is not just individuals who are not working and on benefits, but it's the in-work food insecurity, poverty that is rising rapidly. And then of course, people that have got mortgages on variable rates, not a lot of people have spare cash already, and if your rate's going up from 3% to 6% quite soon, that's a significant amount. £100,000 mortgage, for example, that they've then got to find, and if they haven't got it, then what are they going to do? I mean, we have, so yeah, I speak from that, and then that then has an impact on the voluntary sector, and certainly the charities that operate in the social support arena. A different crisis this is. COVID was one crisis. This is definitely another crisis, and that's why we're very conscious at Fair Share, as are lots of organisations, because we operate in the poverty space. You're going from one crisis into another, and it's pretty depressing sometimes.
Yeah, it can be a real challenge. Diane, did you have anything to add, or shall I draw things to a close? I'm conscious of time.
I'm fine, thank you. I think the two of you have done a good job with that one, so I'll duck out of this one. Thank you. That's
okay. Okay, so thank you ever so much for everyone who joined us today. I hope you found that useful and got some good points. Of course, do reach out if there's anything you want any clarification on. Myself or Dan would be happy to deal with any follow-up questions that you think of after the event. Simone, I know that you are opening up a new venture in Nottingham, if that's still going ahead, and also have recently opened a distribution centre in Lincoln. As always, you're looking for volunteers, so I just wanted to give that little plug for you.
Yes. Also, Neil, if anybody's interested in receiving the slides, I'm happy to send them over to you, and you send them on, or by all means, if anybody wants to get in touch with me, then do so.
That's great, thank you. And yeah, just to finish then, just by saying we do try our best to sort of take feedback on board and constantly improve these webinars, look for topics that might be of interest for future webinars. So please do give any feedback that you have in that regard, what you'd like to see, anything we could be doing better. But hopefully you enjoyed today's webinar, and thank you again, and we hope you'll join us for the next one. And goodbye, have a good day.